let's look at Gillette. Gillette is even worse. Gillette's stock growth rate over 3 years has been 3%, and its earnings growth has been 14 to 16% year on year for the past 3 years, and its stock price has grown by maybe 3%, 4% max over that period. And the dividend yield is not much to write home about, regardless, because these companies are listed abroad and they pay a royalty. So the people who end up sucking most of the money is Gillette's main branch, not Gillette India.
No.
And this is the case with HUL as well. And I'm not going to go into the math for HUL. It's very similar to this. Okay, that being said, now let's look at the counterfactual. Let's look at ITC. Let's look at Exide. ITC, a company which grew at a measly 7% compared to HUL's 10% or 12%, and you have Asian Paints, which grew at 15%. So all of you must be thinking this is a big loss for you, like loss of face. Your company, which you've been touting, has only grown at 7%. But look at the stock price. That's where it really matters. There's been a reversion to the mean, because ITC has been brutally undervalued for quite a while now. And its PE ratio has been low enough where your dividend yield alone was about 4%. It touched about 4%. And now you have a 4% dividend yield, and you have the stock price, which is compounded by 32% year over year. So this is the kind of growth you're looking at in stock price, and this is the kind of returns. ITC has blown the other companies which we talked about, Unilever, Asian Paints, or be it Gillette, out of the water. Fine, ITC, I'm cherry picking, is another argument. Let's look at Exide. Grew at 1% year over year. The growth rate was 1%, and that was through cost cuts, which Exide grew at. And I just want you to take a guess at what the stock price grew at year on year for Exide.
Wild estimate, then I don't know. Year on year, it grew at what? 10%? I have no idea, man.
Okay, and its stock price actually grew double that. It grew at 18% year on year with an annual earnings growth rate of 1%. That's the kind of numbers we're talking about when you do value investing.
Yes.
Growth really does not matter as long as you have a solid company with zero debt. Exide has zero debt. ITC has zero debt. They have enormous cash reserves. You have these two wonderful companies which are giving you phenomenal dividend yields. Exide was giving you 3%, and now you add 3% on 18%, that gives you 21%. 21% on Exide. The Exide was a no-brainer. Exide, the PE ratio was like 14 for quite a while. At least ITC, you could say that, okay, you're cherry picking. It's one company which has done well. What about your other companies? Take Exide. It's 1% earning growth, and it has blown Asian Paints, which grew at 16%, out of the water.
Okay.
And the question I have for these fund managers touting growth over value is, how do you respond to a company like Exide doing so well? I don't think there is any answer.
I don't have answers for that.
Yeah.
Then I guess they're not doing value investing. Maybe the differences are, I don't know what investing they're doing.
Yeah.
Because at the end of the day, you want to make money. So I don't know. And I'm quite surprised.
Yeah. And in the middle of all this, Exide had a life insurance company, part of it, which demerged or something of that sort happened.
Yeah.
And even after all of that, so much value got unlocked just through reversion to the mean. This principle works. Howard Marks was not lying to us when he said that any asset can be a good asset at the right price. As long as you're able to buy 20 rupees for 10 rupees, you're a winner. Just because the 100 rupee note looks very nice doesn't mean that you'll pay 101 bucks for it. That's what you're doing with Asian Paints. It's a shiny rock.
No, another way to look at it would be you're putting an FD in a bank just because the bank looks nice.
Yeah.
They give you half the returns of any other bank, but you just want to put your FD there because the bank looks very beautiful.
Yeah, and I really don't get it, because okay, this makes sense with someone who, it's a human person who you can spend money on and you have like a relationship with them. That's fine. What is Asian Paints giving you for the loyalty you're showing it? I don't see any sort of loyalty benefits out of it. And I know a lot of you in the upcoming years, maybe 2 years down the line, will look back on this video and say, hey, look, Asian Paints has suddenly performed very well. The principle is not to bash Asian Paints or Gillette. The idea is to show you that value.
It's just an example.
Yeah, it's an example to show you that value investing can still work.
Yeah, and you're absolutely right. People might suddenly wake up on Asian Paints and dump Asian Paints, and 5 years from now, Asian Paints
will do phenomenally
well. Meaning the PE corrects in Asian Paints to below 20.
Yeah,
and the share price takes a beating, and then from there you'll see a rebound. Sure, why not? A lot of companies, if you go and cherry pick like that, we can look at what happened during the pandemic. If you pull up the chart, any company, including IndusInd Bank, went down below book value.
Yeah, about
Then
400 rupees.
then it rebounded. So it's all a question of when. The point is, we are investing now.
Yeah.
So we're talking about investing now.
And this video is not doesn't mean that you go out and immediately buy Excite, because if you look at its P, it's 30.
Yeah, it's not affordable anymore.
Yeah,
It's become a diamond, as Anand says.
Yeah, so you just have to pick companies which, and I hope this video has convinced you enough to give value investing a shot if you haven't been convinced before.
Yeah, and stop basically looking at people on internet and saying, okay, they said buy this stock, buy that stock. Don't do that. Do little bit of research. And if you don't have the bandwidth for it, passively invest and forget about it.
Yeah.
But because even if you had passively invested, instead of investing in Asian Paints, you would have done far better than investing in Asian Paints just because you saw some guy tell you to buy Asian Paints.
And
that's what I basically want to say. Just, if you don't have the bandwidth to do any research, passively invest and forget it.
And all of this depends on interest rates, because when your interest rate goes down, companies like Asian Paints end up doing well because there is too much money chasing far too few goods or stocks. So you see companies with high growth rates, people are willing to pay for that growth.
Correct.
But when you have an era where you have positive interest rates, it may not work all the time because you don't have US investors coming in to buy companies like Asian Paints paying any price whatsoever.
Correct.
So you have to look at the macroeconomic condition as well. And the underlying macroeconomic condition which made this possible was that interest rates were jacked up. So companies which were really appropriately valued are the ones which ended up doing well. So this is your question of zombie companies versus, good companies as well, in the sense that interest rates distort markets quite a bit. And you have to stick to your fundamentals and figure out what kind of stocks and what kind of investing will stick with you throughout time. And ITC and Excite have performed well in the current market as well, where interest rates are currently going to be cut in the US, and they're still performing pretty decently.
Yes.
So the idea here is that value investing or buying the asset at the right price is what matters. And always keep fundamentals in mind, regardless of what kind of investing you're doing.
Correct. And if you don't, you're going to get burnt.
Yeah. 2-3% is nothing to write home about.
Correct. And always when you see any video, please remember what the video's context is. If you're looking at any YouTube video, try and see when the video was made and what is the context, especially if it's about investing, because investment is always relevant to what is happening now. No one tries to invest in the past or invest sometime in the future. We're always talking about investment in the current sphere. So keep that in mind. Even if you're looking at some other YouTube video about Asian Paints or something, try and see what it's about, when it's about.
Definitely. Yeah. And just to reiterate, we are not investment advisors, and we never.
These are just our opinion, humble opinions.
Yes. Yeah. We hope you enjoyed this video.
Yeah, we should have. Thanks for watching, and see you in the next one.
Good evening. My team has decided to do another event. The last event was at Trivandrum, was a very successful one. So we decided to ask people where we wanted to do an event, and my team chose to do an event in Dubai. We are planning to do an event in Dubai on the 24th of February. The event is roughly scheduled between 3:30 to 5:30. It's a Saturday, you will have plenty of time. Those desirous of attending the event or meeting me may contact my team at the WhatsApp number given below or drop an email at the email ID given. My team will contact you and help you. I hope to meet you all in Dubai. It's not only Dubai, anywhere from the Emirates. I hope to see you there. Thank you. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.